Okay, so guys, okay, there we go. So finally, good morning, everyone. I do apologize for the slight late start. I had a few technical issues here, so hopefully everything's running smoothly right now, so you can hear me. But yeah, basically, guys, as always, good morning. Yes, welcome to this Traders Espresso with me, Darius Anucauskas. Today's the 14th of May, 2021. So yep, welcome everyone. Welcome to this last trading day of this week. So today's Friday. Yep. So hopefully you're all kind of prepared for the weekend. If you're not, then hopefully your tasks are going to be done. So that you can go enjoy and enjoy the weekend. But nevertheless, guys, before we jump into the charts in this session, we have to quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, guys, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course, our JFD Bank website, and specifically our JFD research page, which if you go on our jfdbank.com and click on the research tab right there on the top, it'll take you to this page, which we update on a daily basis. So yeah, I believe you can find a lot of useful information here for yourselves. Now, jumping into the charts, guys, let me just quickly double check my technical setups and everything. Okay. Now, jumping into the charts here, so the investor morale got boosted, and we saw the equities kind of yesterday, the US ones and the Europe, initially starting off with the some of the European ones, but yeah, the US ones rebounded, of course boosted by morale, by investor morale. I mean, coming back into the market, the Fed officials kept trying to, still trying to calm down the market, the market sell-off, the recent sell-off that we saw, of course saying that basically inflation will be transitory, and they're kind of keeping an eye more on employment. So basically, all methods are good, of course, for them to calm down the market. But this, of course, that kind of seems to be working out for them for now. Now, looking at this technical picture here, you can see that yes, the Asian session here, Nikkei pushed Nikkei pushed higher. However, it still remained below this 28,326 territory. Now, although maybe the Fed officials were able to kind of, like I said, boost investor morale again, but still will remain cautious, because from the technical side, I mean, we see that certain levels got broken, and certain levels, when they previously acted as good support areas, now they could be acting as good resistance levels. Keep that in mind, and this is exactly the case here with Nikkei. So let's see if this 28,326 territory will continue to provide resistance, because if it does that, then another slide is inevitable, and we could see a push towards this 200-day EMA or that psychological 27,000 mark, and then of course we'll take it from there. But at the moment, yeah, that's the kind of game plan. Shanghai Composite, Shanghai Composite, well, this one's a little bit more positive, and you can see why. I mean, we saw a push further north, and basically with The reason why I'm kind of saying here with Nikkei and Shanghai, Nikkei seems to be a little bit more sensitive in terms of any kind of negative news or negative, or just in general slight negativity. However, Shanghai Composite is a little bit more stable here, and you can see that we still remain within this rising channel pattern. However, although it's showing good results here, I would still prefer to go and kind of wait for a push above the 3,496 territory. Also to wait for a daily candle to stay above it in order to go for some higher levels. So keep that in mind. Basically the same analysis remains still. So let's see how this is going to play out, but at the moment, I'm going to, like I said, take a cautiously bullish approach here on Shanghai Composite, and let's be careful. Similar story here with the German DAX, and well, first of all, we can get rid of these upside and downside lines here. So this one got violated, no longer valid, and the most important here is that yesterday, for example, when I covered the German DAX, I said that if we get a drop below this 15,093 territory, then my next target is around here, in between the 14,804 and the 14,845 levels here. As you can see, we managed to reach that, so perfect test. However, we didn't really stay near this area. Instead rebounded and made its way, and the index made its way higher. It managed to close fractionally above the 21-day EMA. If we take a look at the cash index right now and where it's currently sitting at pre-market open, we'll see that the price is currently sitting at around 15,280 zone. So basically nicely above yesterday's close and above this hurdle here, this 15,269. So if it remains above it, then yes, of course, I'll continue aiming for the upside here. And my next target will be, well, actually not this one, not the 15,355, but instead the highest point of this week, guys, and that level is around the 15,420, approximately around there. So basically, it seems that let's see if we're going to repeat the scenario of last week, where also we had initially in the first half of the week we had a strong decline, but then at the end of the second week, I mean, the index managed to recover and managed to make its way and create and kind of close the week in positive territory. So so for now, let's see what's going to happen here. But if it climbs above this area, guys, above this hurdle, this 15,420 territory, that's where we could see the kind of the candle here, the weekly candle ending in positive territory for the week. However, let's not rush into anything for now. It is how it is. Yes, we are climbing higher, but we need to be very careful. If it continues to trade above the 15,269 zone, then yes, we'll go for slightly higher levels. The FTSE was the loser yesterday, together with IBEX, the Spanish IBEX, and the FTSE 100 drifted initially lower, broke this upside line here, but as you can see, this is the reason why I always say that wait for that daily candle to finish, because basically, yes, we dropped below it, but we still ended up being well above this upside line, taken from the low, the 26th of February. Don't get me wrong, I mean, I'm not saying that, I mean, here we will just let's say this is a perfect opportunity for the bulls to step in. Probably for me, from my side, I would prefer to wait for a push above the 7,040 zone right here, which acted as a good area of resistance recently. And then, yes, if we climb above it, then I'll start aiming for the upside again. But at the moment, I'll take a bit of a careful approach here, because basically what I don't want to see here, and what I don't want to end up seeing here, is a potential let's say bearish flag formation. Now what I'm talking about here is basically if you look at the bodies of the candles, these candle bodies, we'll see for example the 11th of May candle does look like a nice pole here, and basically if this is gonna be forming something like this at the end of the day. Let me just grab the other arrow here. So if it's going to form something like this, maybe it's going to be a flag, maybe it's going to be a pennant, could be, yep, basically then we could see a further decline later on, maybe even going into next week. So I'm not saying that this is exactly what's going to happen, but it's just, like I said, I don't want this to happen. But again, the market doesn't always do what we want it to do, so that's why we need to kind of consider all the options. However, like I said, if it travels above this 7,040 zone and stays above it, then we might consider maybe a bit of a move higher here. So, but again, at the moment, let's ignore all these bullish flags and pennants, bearish flags and pennants, and let's keep an eye on some of the levels. Now, Dxy, the dollar index. So yesterday it kind of stayed, I would say, flat, and but remained near the downside line taken from the high of the 31st of March. So in a way, the same game plan remains here. I need to see a push above the 91.42 zone in order to get a little bit more excited with the upside. However, if you're a little bit more on the risky side, then keep your eyes on this 90.87 territory right here, which previously acted as a good area of support, then resistance. If that gets cleared, then we could go for some higher levels here, and maybe initially then going towards this 91.42 territory. And if that fails to provide a resistance, then yes, I mean, higher levels could be met, guys. I'm pretty straightforward here. So US oil. So US oil declined, and we managed to break this lower side of the rising channel, and we're currently sitting slightly below that 63.80 zone. Not far, of course, but in a way everything's leaning a little bit more towards the downside here on this one. So that's why for now, guys, let's be very careful, let's be very cautious, and for now I would say that this increases, such a move here, this increases the chances for a further move south, guys. So if it continues to trade below the 63.80 territory, yes, my next target is the 62.94 zone, which we almost tested yesterday. But if that gets cleared, the better target is the 60.64, 65 territory right here, marked near the lows of the 22nd of April and the 26th of April. For the upside, I still need that push back above the barrier here, the 66.40 zone. And as you can see, I need that daily candle to remain above it in order to go for some higher levels. Bitcoin Cash. So Bitcoin Cash, although not showing good strength, it still remains above this hurdle, this 1,218 territory. I spoke about this level, and basically, for now, I would say let's keep an eye on this one. Let's keep an eye on this hurdle, because if it starts breaking again, then yep, this potentially could lead to some further declines. But if it doesn't, then maybe we could see, like I said, as I mentioned to you yesterday, we could potentially see this as a broadening formation here, which, to be honest, tends to break to the, in the direction of the prevailing trend. So the prevailing trend was to the upside. Then we've entered this formation now, and if it starts pushing higher, then there is a good chance we could see a breakout here somewhere and then a push further north. But again, sometimes that doesn't happen. Well, I mean, we have to accept that, but at the moment, according to all the TA rules, guys, that's the kind of the game plan. So yeah, let's see how this is going to play out. For now, I'm kind of still, let's say, cautiously bullish. I'm cautiously bullish, and yeah, as long as the rate remains above this 1,218 zone. Ripple. Ripple is declining a little bit here. However, still remains near this area, or should I say above this upside line taken from the low of the 4th of April, which at the same time could be seen as a at the lower side of the triangle pattern. So, however, if you want to be a little bit more careful in the cautious side, maybe wait for a break through the upper side. If you are aiming for the upside, wait for the break through the upper side of the triangle here, and then go for some higher levels. If that doesn't happen, I mean, if instead we break through the lower side here of the triangle, then, well, I mean, we could prepare ourselves for maybe a bit of a decline here. However, some levels need to be adjusted. Previously I had these, but basically, okay, so this needs to be adjusted here, guys. Let's see if we can tidy up this chart a little bit. Let me just remove these lines here. Now, in terms of the downside, so previously I had these levels, but now what I'm going to be focusing here on is going to be the lowest point of April. I think that's, no, sorry, the low of the 23rd of April near the 0.8747, and I'm going to aim for that level if we get a drop somewhere below here, not only below the lower side of the triangle, but also below the 1.20 zone. If we drop below the 1.20, in a way, this could open the door towards further declines. AUD USD. So jumping into a few pairs now. Looking at the calendar, the economic calendar today, it's a relatively quiet calendar. We do have a bit of information coming out from the US. The retail sales, that's what probably everybody's going to be watching for. And from Canada, we have the manufacturing sales, but yeah. So yeah, the retail sales, or U.S. retail sales, are going to be the ones to watch today. So basically, in terms of AUD USD, so because this is more of a risk kind of a risk pair, we're monitoring the overall situation in the equities. If the equities start rebounding nicely into the upside, then yes, we could see AUD also pushing maybe higher. However, at this point, I mean, looking at this whole picture, it's not really clear one, and it's not a very, let's say, very promising for the bulls, because from the technical side, I mean, looking at this, we are near this key support zone around the 0.7690. So if you want to go for lower levels, well, of course, a break and a daily candle staying below this would be needed, and then yes, further declines could be possible. But for the upside, well, for the upside, I would probably wait for a push back above the 0.7818 zone right here in order to go for higher levels, and then we could aim for that 0.7895 zone, which, as you can see, provided a very nice area of resistance recently. So yeah, that's the kind of game plan here on AUD USD. So keep your eyes, for now, probably keep your eyes on the 0.7690 zone. USD CAD, guys. So USD CAD managed to climb and stay above this downside line, the one that I talked about yesterday. And this is what I mentioned yesterday to you guys, that if it breaks this downside line and stays above it, this increases the chances for a further move north, especially given that oil also started declining. And this could weigh in on the Canadian dollar. Also, of course, the fact that the DXY is kind of let's say on the slightly cautiously bullish side as well. So that's why we're going to be very careful here. USD CAD, yes, USD CAD could push higher. Basically, for now, this is exactly what I'm going to be leaning towards. I'm going to aim initially for this 1.2250 zone, and then I'll take it from there. I just want to see how it's going to perform near this hurdle. If it provides resistance, then yes, another slide could be possible, but if it breaks, we might also maybe see a push above the 21-day EMA. Gbp USD, so here the pair drifted lower, but remained above the 1.40 zone right here. I talked a lot about this yesterday, and basically it remained above that psychological territory. However, it's a bit of a tricky one right now for GBP USD, because GBP itself, I mean, seems to be on the kind of stronger side. However, the US dollar is picking up the pace as well. So that's why we're going to be very careful here, and probably for me right now to take a positive approach here. Or should I say, to be to aim for some higher levels. Well, I would prefer to actually to wait for a push above the current highest point of this week near the 1.4167 zone, and then I'm going to aim for the upside. At the moment, I'm going to take a neutral stand here, because if it suddenly starts falling below that 1.40 zone, a larger correction to the downside could be possible. Euro against the Turkish lira. So new all-time high. I talked about this yesterday, guys, and this is what I said to you to keep an eye on, because this is not really working well here for the Turkish economy right now. So, and in general, I would say this is a reflection of the Turkish economy, and it's not working well. It has a few issues, but hopefully they can get back on track. But at the moment, I mean, this is the result we're getting. We're getting a pair which is just is just showing you one-way traffic, and yeah, it's at the moment it's not really looking good here for the Turkish lira. So for now we are in uncharted territories, and let's see where this is going to find resistance. Of course, initially we'll look at these beautiful numbers as 10.5 or 11, and then we'll of course take it from there. Euro against the South African rand. So I've talked about this one previously, and basically after finding resistance again near this 1746 territory, or even maybe we could round it up towards 50, but actually not really. I think no, not really. So more of a 1746, the 0.30 zone. We found resistance here. We had a few overshoots, but failed to stay above it and drifted back down. Ended up testing this 16.95 territory, and yep, had a small breakout, but again didn't stay below it. So basically, in other words, we're right now stuck in a little range. So we need to see, although the overall trend is still to the downside here, still we need to see a clear breakthrough one of these levels before, and we need to see the daily candle staying outside of these levels before we could kind of consider the next short-term directional move. So at the moment, of course, it is a little bit closer to the lower side of the little range here, and we are near this key important zone. So if that gets cleared, then yep, further declines are possible, guys. And finally, EURUSD. So EURUSD remained above this upside line. It's currently trying to make its way higher. However, as I've mentioned to you yesterday, my preference right now, and it's a conservative one, I would prefer to wait for a push above this area right here, the highest point of this week near the 1.21882 zone, and then aim for the upside. At the moment, guys, I'll be very careful here, and let's see how today's day is going to play out. So guys, that's it for this session. I hope you found it useful, and thank you very much for joining in and watching this one till the end. I really appreciate that. So I hope you'll have a fantastic trading day. Stay safe, have your stop losses in place, don't overtrade. It's Friday, guys, and yeah, guys, I'll see you later at my trader's tea time, as always, 12:30 GMT time. Thank you very much, and bye-bye.